Hey guys, we are back in the office and looking at what's going on today in the triple Qs. Been a nice geometric move. Sorry that we are late. We had a problem with the stream earlier, with the live stream, but we are back right now. So today's been full of really good opportunities. If you're part of the signal service, if you signed up for the new triple Q and NQ signal service that we're doing, then some of you went live today and some of you are going to go live on Monday. So we need to make sure that it's sort of bulletproof. A couple of you are beta testing it for us, and we appreciate that. But the rest of you will be live first part of next week. Things have been good, and the market has been very geometric, and things have been lining up exactly the way that we would expect them to. So let's take a look at the charts and figure out what the strategy is going into the closing bell. You can see here that after a gap to the upside on the open, that was on employment news, we had this move down into the bottom of the range, down at the bottom under the central pivot. And over the course of the session, there have been lots of opportunities for these very geometric retracements that have been going on. So you had this move here, this move here, this move here, right? Everything has been lining up very nicely. That last arrow, the shorter arrow that I just drew, happens to correspond to a fib retracement of this major move to the downside and this smaller move to the downside. So the fib retracement gives us on the minor move there a 618 retracement just above that pivot and a 50% retracement right at the pivot. And that, of course, if you are on the alerts, is where those trades were targeted a little bit earlier. So those were beauties, right? They came in, they lined up exactly the way that we thought they were going to line up, and we had two trips down to the target. And now, if you're a proponent of not going back to the well too many times, then what you would be focused on is some smaller targeted moves if you're trading the NQ, because the retracement from here down into here at this volume by price threshold is still plenty of room for profit on a contract or two. But if you're trading the triple Qs, you're probably looking for something a little bit more meaningful, like the move back down into that original target. But one way or another, it's been good stuff, and there has been lots and lots of confluence. So if you took the course, if you were in Las Vegas, or if you came to the Miami extension of that course, and you've been looking at all this stuff, then what you know is that right now we are trading in the box, which is a very, very comfortable place to look for these ricocheting kind of moves, up from the bottom band, back down on the inflections. And when you get this kind of a thing that starts to happen, then these become pretty predictable. And the key really with trading these indices is to wait for the part of the day that is predictable. And when you have a big trending move like this one and it settles into a tight trading range, this is not the time that I'm looking to scalp these things. This is the time that I'm waiting for my anticipated move. So right now we're headed back down. So if you're on the alerts and you're looking at this, then now you have had 1, 2, 3 opportunities to follow through on this, and you have paid for your alert service for probably the next 6 or 7 months, right? It's all good stuff, but it's only good if you're able to follow the logic. Go back to the workbook, review the stuff in the workbook, try to understand why things are lined up the way that they are, what the confluence is that we're looking for. There has been a ton of it today. So today we are staying firmly under the session VWAP. We are trading right into the retracements of a trend. The retracements of the trend are traded right at the central pivot. They're also traded right at the anchored VWAPs over the course of the session, and they line up really, really nicely with this stuff right here, which is giving you a 2 standard deviation move away from the mean. So once you get that 2SD out away from your expected average price, I don't have the average plotted here today, but the average, of course, is like right in the middle of these 2 lines, right, is where we'd be looking. And, as we make the reversion move back toward the average, then you're going to see some price support. That price support is evidenced in the confluence with this volume by price threshold, right? So everything just sort of comes together. So as long as the pieces of the puzzle come together like this, you know, it's just important to keep your focus. Don't try to push the trades. Don't try to rush things. Just wait for the opportunity to come for you. And when the opportunity is right in front of you, that is the time to act on the decisions that you've already made. You want to have the courage of your convictions, put your stuff together, figure out why it is that you want to put a trade on at a certain level. And when it gets there, you know, don't hesitate. Just have the orders waiting. I like to rest the orders, wait for this thing to come to me, and then, you know, just take the positions per my plan. Okay, so that is it for today. As I said, just wait for it to come to you. If you're on the signal service thing and you haven't got the alert yet that your subscription is going live, don't worry about it. We just want to make sure that we test it and retest it and retest it so that you know, everything's going to the people that it needs to go to. And as for the rest of the day, going to the closing bell, just wait for more of the same. Look for the market to keep in this geometric pattern and stay on top of those reversal periods, because we are coming up on the bond market close, and when the bond market closes, we're definitely going to see a little bit of a whipsaw. We could see a pop back to the upside above that central pivot. Don't go back to the well too many times. Let's just keep the trades very, very orderly and keep those stops nice and tight, right? Don't risk a bunch of money on a trade. Never risk more money than you can afford to lose, right? All that good stuff is good advice. And I will see everybody tomorrow right here. All right, thanks. Take care.